Good morning, everybody, and welcome to the European crossover webinar. We saw the rally in the euro. It's pulled back somewhat, and we saw some big moves in crude oil yesterday. We've seen the BOJ go negative interest rates. Paul says, strap your boots on tight. It's going to be a wild one today. No, it's not. Action's already happened. There's nothing setting up here for a wild day today. That was yesterday. Kuroda surprised the market with the negative interest rates, and he did well to pull the rabbit out of the hat. But you look at the SPOOs, there's no big move in SPOOs. There's no big move anywhere. All that happened yesterday. You're kind of like showing up late to the party at 1:30 in the morning and wondering why all the drinks are gone. If you look at the dollar yen, yeah, there was a nice surprise by Kuroda, but there's nothing in the market that's happening. Absolutely nothing. Obviously, like I said, the big news is going to be on the BOJ going with the negative rates, which really was able to go in and spike up the dollar yen, but it's been a sanguine market really across the board with the exception of crude. Crude's just moving on its own. And we had that big rally yesterday, and I was looking for potentially a very big move because we were seeing the market set higher lows. Technically, it was set for a breakout, and we're looking, if it could go on and get past above that ridge on a 2-hour close, which we did, and opened up test for 33.44, 33.92, and 34.29 being my final target. Actually, 26. So I was looking. I think I tweeted out on the fib, and I even flipped the other side and went short as we blew past 34.57. And then we hit that level at 34.81, which I tweeted out a 5-minute shooting star, which really I shouldn't have covered so quick on the short, but the action was so volatile. And then we came back a good $1.30. Then we turned around and went back up. Then we pulled back down again. That's where all the real action is. There's nothing happening, anything today. Usually on Fridays, I don't even do hardly any trading whatsoever. I might scalp around a little bit in the crude oil market, but really that's about it. I don't really do too much on Friday. So this is just kind of we're just kind of overview. If y'all have your own trades, you can do that. But there's nothing that I'm going to be doing. So we can take a look at the euro, which I was suggesting that we could go higher, and if we can hold that 9, that would open up the door for this market to go higher. And we got above the bias pivot, and we've pulled back a decent amount. That might have that may have been affected to a certain extent by what happened with the BOJ. But we're still above 9. We're at 9.14, so we can take a look at what's out the day ahead on the market. Usually Fridays, I don't really do too much trading. I always say that, and sometimes I do, but for the most part, I'm not looking to do any trading. It's, if you made your money this week, you made your money, and there's no need, other than if you're just trying to scalp around. Even the SPOOs are relatively dead. They're, trading in a very tight range overall. So I usually don't like to get mixed up with the Friday hijinks as we start to go on later in the day. So other than a few scalps, there's obviously some scalping opportunities in crude oil, but like I said, that's been a wild market. And hopefully some of y'all were able to make some money yesterday on some of those moves. And we do get GDP, advanced GDP today, and Canadian GDP. So we're just going to move in and take a look at what's going on with the euro. I guess we should just move into really the dollar yen because that was a big mover. So we'll just move into the dollar yen now. But like I said, you can see that there hasn't been any movement in the SPOOs. There's no wild action being set up. You might see the market bite a little bit on some short covering, but there's nothing set up for some big wild movement. So I'm not sure what you were referencing. And later in the New York session, they can hit some stops up here and try and work this 12.25, but there's nothing where the market is getting all wild and crazy right now. So we'll go and take a look at the dollar yen. And as the headline indicated, Kuroda surprised the market with his reference. I mean, you know, with going negative. I've made a run to the top of this range that I've had in place since frickin' Moses across the desert. This 1882 to 2130. Like I said, the market certainly would. I mean, I hope people didn't. To be honest with you, I don't even pay that much attention to FX anymore. I'm so involved with crude oil. I mean, with the exception of the euro, I don't really pay attention to these other pairs. I mean, I didn't bother to even stay up for the BOJ. To be honest with you, I didn't even read the headline until it came in this morning. But I mean, you know, hope nobody had their orders in place ahead and was thinking, I'm going to sell, you know, just ahead of 120 or something like that, ahead of the actual release, because like I said, you never know. You absolutely never know how this stuff is going to work out. And he certainly did go in and surprise people. So, now he went to this top of this range now. I mean, if you were up at that time and saw the release, and you saw this market obviously go pretty crazy on the upside, you had a chance to go in and take it up here against this 2130 at the top of the zone. But I think that going into the end of the week, I mean, obviously, you know, the BOJ's action, you know, caught the market off guard, basically caught it flat-footed. So they're not going to go in and, I mean, the market overall, I think, is just going to let the market, is going to let the prices kind of stand where they are, and then they'll take a stab at it, you know, next week. So you saw this run up. And you saw a pretty good pullback, we talked about that yesterday. As I said, you know, even if they do it, they're going to try and fade them. But what people were doing in here, as we came back in here into this line, people were going, well, let me go in and cover, and just, you know, even up my positions. Or if they were able to have any gains, they were quick to take them. And then you can see, basically, now the market is just inching upward just trying to, again, like I said, people were using the sell opportunity, and they made some nice cash because we had referenced it that they would go in and fade. When someone asked me about it, I tweeted out, well, whatever they do, they're going to fade. They're going to look to fade it, and if they work a little bit higher, they're just going to fade it from higher levels. But like I said, same way we talked about the euro, as you come into a Friday, you'd be looking for people to even up. So people are going to look at that and say, well, wait a minute, you still cut interest rates. Why not let the market just go and do what it wants to do afterwards? So those that were able to go on and fade up against those levels quickly took those profits, as evident by this move. And now they'll just let the market decide what it wants to do. So my guess is if they start the beginning of the week, they'll have had a nice daily close, probably an okay weekly close. I don't really look at weekly charts. But starting at the beginning of the week, they may try and trip this high. And then from there, the market will probably run into a little bit of run out of gas up in here. 2182 is a pretty good marker. And they'll just go and take short positions, and over time, then we'll probably come back down. My guess is we'll probably come back down towards this 1969. So if we start out the week with them pushing it a little bit, then they can probably get it. Well, they'll take out the highs. I'm saying I think that that's what the market will try to do, provided we can close in this area, anywhere in this area. Then they'll probably start out the week, letting the market do what it wants to do. We'll take out this high, and then potentially a good marker is going to be this 2168 to 2182. And then from there, the market may sit there and vacillate back and forth, and then we'll eventually see a pullback. And then that pullback is the real area I think that they'll run into will be this 1969. You see the significance of this ticket. And I'm just looking at it, like I said, from a technical standpoint. You can see the significance of 1969 right here. So I don't think anyone's going to go and take on this market ahead of Friday. It just doesn't make any sense. So you start the week out on good footing, take out the high, have them run out of gas between 2168 to 2182. You can see that right here. Very nice ridge at 2182. So in this area is where I would think that you'll see the market. They're starting to, take on some shorts right here. Right there. So, like I said, you never know how it's going to go on and play out, but that's the way I would look, is that if they can finish up steady here, then they'll start out the week trying to push and take out this high. And then I would expect the shorts to be put on between 2168 to 2182, and then the test back will be 1969. But I mean, it's the same way that I'm looking at stuff. You just let it go for the week. I mean, because then if you're trying to take on shorts here, and it doesn't mean they won't pull back. What I'm saying is the market would seem more likely to, just like it's working up higher, more likely to just let it go. Let it do what it wants. Let them work them up higher. Let them, blow some stops up here. Then the market will see how it's reacting. And then this area is where they'll probably go and see some shorts start taking place. Then we'll see how long it stays up there. And then the pullback, I would think, eventually will take us to target 1969. And that's where we should see some demand come into the market. So we'll take a look at dollar CAD, and we came into our value area. We talked about this too. It's the same thing. I come up with these areas. It's the same thing that I'm giving you right here. Is where I think that you'll see some supply. Will people be willing to take on the market at that point for a move eventually to right there? So when we go to the dollar CAD, we talked about this area, 39.61 to 39.81, and you can see it took it out by what, like 5 pips or something like that, you know, and maybe 8 pips. And now we've had, you know, pretty nice bounce back to that area. We came back to test this value zone, and we've seen a pretty nice reaction in the dollar CAD. I don't really care to trade the dollar CAD because sometimes it just sits there, and as I said before, I was basically just using it as a proxy for crude and said screw it, just you know, just trade crude. And but if you trade the dollar CAD, I'm just saying is you just trade it from the technicals overall, because the market's been, you know, kind of doing whatever it wants as of late. Even with crude rallying, the dollar CAD, you know, still had its issues. I mean, we're starting to pull back right now in crude, so you're seeing a nice bid momentum for the dollar CAD. But for me, I'd rather just trade the crude then. But you can see here that there was, on this move down here into this value area, it gave me a great opportunity when we were looking yesterday when the market made that run up beyond that target, my final target, which is 34.26. And we blew past 34.50, and the market really got hairy and just really got overdone with itself. But while it's happening, the action was so fast and furious in crude, I'm not even paying attention to what's happening in the dollar CAD. But if you feel more comfortable trading this market, you're going to certainly go and use that, you know, to your advantage. And the same thing with the run that we just had up in crude. We made a nice little run up here. Now we've run out of gas. We made that run earlier in the European session up to $34, and that would have coincided with this move down here in dollar CAD back into this value area, and gave you an opportunity to go and take the other side of the market. If, like I said, you want to continue to go and trade it, which it is basically a proxy for the crude oil market, because the Canadian economy is so dependent on energy. So now we're back into the zone here, which I think would be, if you were able to take advantage here, if you're scalping it, I would be just getting out. You can see they made the run right up to the tip of the zone I have here. You see that? Maybe missed it like by 2 pips, and now we started going pull back. So, I mean, overall, it's been, these markets have been pretty good if you're trading from a technical perspective. I mean, because of the inherent volatility that we've seen here with the crude oil market. So we're going to take a look at the gold market, which I have not been paying attention to at all. I mean, I've seen what, you know, some of the moves that it's made, and post that FOMC, we've moved back. I mean, you can see here the inklings right here of a head and shoulders, kind of busted up, but you can see here, but we're back below this 11.15, but not by a whole lot. We'll have to see how this market plays out, but we certainly got that move that we talked about, the close above 11.15, which technically opens up the door for 11.60. But we had, you know, like I said, a nice run. We knew, what at least the thinking was that when the Fed would, you know, give the idea that rate hikes were not imminent, which would open up the door for the gold to move higher, since technically it had done some good work. Personally, like I said, I still think that it's just going to go lower, but on the backdrop of the Fed, that expected idea that rate hikes are not quote-unquote imminent, that would basically grease the wheels and let them, take an extra run up, which we did. We'll have to see what's left of it on this pullback. But I haven't. I really don't see anything. I mean, if you were to look at it here, and you're looking to buy gold, this 740 is going to be the area right in here, because you can see here, right here. You see that? And back here we test it, and then we finally get above it. Then we kind of hold here. So if you're looking for a downside target, this would be your area right here, 740. Definitely to cover your shorts. If you wanted to try and pick it up, getting long here, then against this 1104 would be a great area to go in and come in here with the gold market. Like I said, once again, I don't care for it. I think gold is probably a good market to trade if that's all you trade almost, or you're looking at the markets. Like I said, the thing I don't like about it is that you have to hold it overnight, and I don't like the idea of having to hold it overnight. And then the thing that drives me crazy is you see how it sits. I mean, it's not like these are 5-minute bars, they're 30-minute bars, and see how it sits like a freaking bump on a log? I mean, for hours. And then we test the downside, then we pop up, and then we sit like a freaking bump on the log, and I can't stand to trade a market like that. So I have no interest in it, but if you're willing to hold it for a few days, 3 days, then I think it's a decent market, okay to trade. It's just not, doesn't match the type of trading action that that works for me. But like I said, if you're trading for the short side, the key thing is it's 11:15. We've talked about this, but if we can get one more yank down, which there's a good chance that we can, I would be covered into the 740. And if you're looking to go and buy it, I think this 1104 is when you want to go and start to step in. 1104.30. But personally, I don't like it for myself. But like I said, for those that want to trade it, that's fine. We'll take a look at it on the 2-hour chart here. I'm not going to pull out the 2-hour chart, just convert it to a 2-hour chart here. And you can see the struggles they had initially with the 11:15. We did, get the close above it. They pulled back to 11:10, but we were able to go and assert ourselves and really make a nice run up here. And I guess some people are looking at this here as a head and shoulders right here. And if that's the case, would indicate a move down here to about 1090. Well, but basically probably like 1092. But before that happens, I really think that, like I said, for the shorts to cover around 1107, we've got that 1107 here. And then on a bounce back, I would go in and be looking to go in and get long 1104 with a return move. If you're, like I traded from just a 2-day, 2.5-day perspective. If you're short, I would be looking to cover into this 1107. I would look to also get long at 1104 with a return trip back up to 1450, and I would actually be exiting out at the 14 area or going to 14 area. Mark says gold also looks to be flagging maybe. I don't know. I mean, like I said, I don't like it. I think it'll work lower. But in the meantime, like I said, if you're playing from the short side, we do have the sell signal, but that's really on the 2-hour. I use the EMAs on the 30-minute. But once again, covered into 1107, looking to buy at 1104 for a retest to 1114. I'd be exiting out, but after that, you do what you want. But I'm just saying from a technical perspective. The key thing right now is this 1450, essentially 1115, to see if we can get a close above that for the weekend. Right now, we're struggling with it. So, here's the deal: if they finally got above 1115, and now they've given it back. So let's take a look at it on a weekly. That's not going to look good if they can't get above 1115. See how much work they've tried to get above it. And I don't think I do have it as daily as an option, which I don't even look at daily charts. But you can see here how we got this engulfing bar here. It engulfs the entire prior body on the daily chart. So that continued to go and work lower. This is probably going to go on and spook the market. You see that? Which will probably mean the market has to do a little bit more work on the daily side. Why I say that I think we'll move lower, I'd cover shorts, if you want to be aggressive, cover shorts at 1107. I'd look to get long at 1104. We could dip as low as 1101, but and then look for a bounce back up at 1115. Okay, well, it's time to go and take a break, and when we come back, we'll take a look at the crude and SPOOs and euro. And thanks for joining us here on the European Crossover. Like I said, usually on Fridays, I don't see a whole lot here with the market. I mean, and as I told you here, they're not standing in the way of the dollar yen. That's just the nature of the market. They're going to let them have their run. Just like I said, the people that ended up shorting here, a lot of them took this opportunity to go in and cover, and they're saying, hey, look, you can't deny the idea that, they made a bold statement with the negative rates. So they bought them back, and they're just going to let the market do what it wants. Then you let it do what it wants as you come into Monday, and then you can take your pot shots. But you can see here the market's not reacting anywhere across the board. So let's go on. Like I said, we'll come back. We'll take a look at crude oil, SPOOs, and euro. And thanks for joining us here on the European crossover webinar. Okay, everybody, and welcome back to the European crossover webinar. And we'll take a look at SPOOs, crude, and euro. Like I said, it's a Friday. The action's already happened during the week. I just don't really see anything happen today. I don't do too much trading on Fridays anyway, other than just to scalp around. Like I said, you're not seeing, obviously we had a big surprise from the Bank of Japan on the negative interest rate, but you're not seeing a reaction anywhere else in the market. There's no reaction in gold. There's no reaction in SPOOs. Crude's doing its own thing. Euro's pulled back after it got above that bias pivot of 945, and that may have a lot to do with the euro yen, possibly. But like I said, I'm not. Like I said, I don't think that we've already had the huge moves during the week. I think the people are traders are just going to finish out the week. They're going to let the the dollar yen do what it wants to do. I mean, anybody, we talked about this. Someone asked me what they're expecting. I said, I don't know. I think that they'll fade them, and if they do some type of action, something that really stands out, which apparently they did, then they'll still fade them from just a higher level, which is what they did up here. But like I said, you still can't ignore the fact that they made a big, bold move. So on the pullback, people were happy to cover because you could just start out, you know what, hey, let me take what I got, and let me go in and start the next week all brand new. And essentially that's what you're seeing. You're seeing this bid coming in, and people just cover and saying, I'll wait till the beginning of the week. And we've already discussed that if they can finish up here, then they'll probably just start out next week all things being equal, they'll probably want to go and take out this high, and then I would expect them to run out of, not run out of gas, but I would expect some pretty decent short covering to come in place right here in this area, 2188, 2168 to 2182. Not decent, I'm saying I think that this is where people will be willing to take on the market. Doesn't mean that ultimately we couldn't go to 2214. I doubt that, but I'm saying I think you'll see some decent action, some bets start to take place here. And then ultimately, as I indicated earlier, I think that ultimately we'll make a move back down to 1969. And then what the market does after that, I don't know. I'm just saying this. That's the way I would look at it. There's no need to go and rush into a Friday. The market, they're just going to let them do what they want. They're starting to, like they just continue to have that nice bid, and we'll probably just end up to finish up the week pretty decent, and then we'll come in next week and we'll challenge those highs, hit some buy stops. So let's go and take a look here in the SPOOs to see what's happening, and really a whole bunch of nothing. Like I said, the BOJ, that didn't impact the SPOOs really whatsoever. We got a nice little bounce in here, but the market's just back to being neutral. Now, as we close the week, there might be a nice little undertone bid, which may allow us to take out this 03, and maybe they can try and push them a little bit higher on just a little bit of short covering, because they'll probably be thinking, well, the market will probably have a nice bid. And going into next week, after what the BOJ did, maybe people will start to look at the glasses half full as opposed to half empty. But I think this is going to be more of a just evening up of trades. But you can see here that we've been trading in this range here, essentially, as we move up here to this 1900, and on the downside, 1865. So basically a 35 pip range with the bulk of it taking place between, let's say, 72 on up. So, as I said, I just don't really see the market doing a whole lot. I don't have any feel what it wants to do here. I mean, it's just doing its own thing. I think the only way that you could be really trading the SPOOs at this point, if you're just looking at it like on a 5-minute chart and taking your action in here. I just don't really see a whole lot here. I think that the risk is that, though, you'll probably see a little bit of evening up as we get further into the U.S. session. I mean, we do have some economic reports, but I'm just saying overall, that's probably what you're looking at unless we get some surprises. If we don't get any surprises, then that's probably the risk is that there'll be a little bit of an undertone bid. But there's nothing really that I can see here of any real substance in this market. So we're going to move in here into the crude oil market, and we'll go top down. We'll go with the 2-hour chart down to the 30-minute, and we'll take a look at what's happening here on the 5-minute. So coming here into the 2-hour chart, I mean, we talked about this yesterday. I mean, if we could get, or I mean, I don't know if I think we did reference here in the webinar, but I mean, I was tweeting out a lot about it on Twitter with some charts, and that if we could get a 2-hour close above this area, 3287, that would open up the door, which we did. And I said, the first level of resistance is going to be 3344 followed by 3392 and 3429, which 3426 I believe was a 61% I believe of the move, and this is going to be my final target. I thought that this move would culminate with the move towards 3426.29 over the course of a couple of days, not a couple of hours, which is essentially what happened. Is this market really got scooting to the upside and really knocked a few people off. And I'd already referenced that it looked like it was trying to put it at the bottom, because we were seeing, not only were we seeing higher lows, but this pullback that we saw in the morning as we came down here, and I think, I don't even remember what the level was, I tweeted it out, but anyway, we saw an absolute repudiation of those lows, and the market swung back very fast, and that was my indication, like, what, this market really wants to blow some doors, and we have to get above 3287, but it looked like it really wanted to blow some doors to the upside. And actually, I think it was this move here. Let me see. Yeah. You know what? I don't think you can see it here on the 2-hour bar. You'd have to look at the 30-minute. But we got that pullback. If you remember, I think, was it 3109? I guess it was. I think it was, or maybe it was 3209. It's 3237. So it had been 3109, I guess. And I was saying that they're supported 3105, but we turned around so quickly and came back so strong that you could tell this market really wanted. It was just like a pot on a stove, and it was just, you know, boiling. You were just waiting for that top to just go in and blow the lid off. And essentially that's what we got here yesterday. And so those that were set up for that move were able to go and take advantage on the long side, although I was surprised to the extent that this market ran up. I did go on and take a short as we blew past this 34.57. To be quite honest with you, I was even looking to go, I was considering even taking shorts in here because I thought the market was really overdone on a very quick term basis, short term basis. I'm glad I didn't. I just frankly just got lucky. I almost pulled the trigger here, you know, going into the 33.92. I thought it just had gone too far too fast. And then I started up at 34.17 at Concerted, and then again at 34.27. And thank goodness I waited. Thank God I waited until we just got, once we got blown past, I thought this market is way overdone. I'll take the short side, but, you know, like I said, I got to be honest, a little bit nervous there. But when I saw this 34.81, I felt pretty good about it here. And I tweeted out that, and then we got that shooting star in the 5-minute. At this point, I think there's a pretty good chance we'll make it down here to challenge this 32.87 here before all's said and done. I guess we'll probably maybe be taking out this 32.75. We'll take a look at it, what it looks like on the 30-minute, but it looks like we'll have to do a little bit of homework here and see what the market's made up of. Obviously, the shooting star has weighed on the market, but when you see this shooting star in the 2-hour, then you're looking for the market on a return moves. The markets, they're going to take them on. And so my guess is they started to take them on against this 33.92. And they got beyond that, but we've started, you know, we got a nice engulfing pattern right here. And so that opened the door for us to move much lower. And before it's all said and done, my guess is we'll probably take a move down to this 32.87. You can look at your 30-minute and 5 minutes for setups to go in that direction. So here's the move that I'm talking about. So we had come up here and challenged, and the market fell off pretty good from those levels. And I tweeted out that we had support at 32.05. Actually, I think on that, that was when the SPOOs, we were live, and the SPOOs were moving down. Remember, the SPOOs were at 1979, and I said they would, you know, they would go and challenge in 1976, and they possibly could get as low as 1973. But it happened so fast that when we got down to this, as the crude was falling apart, I tweeted out about support at 32.05, and the bottom board, I think it's 32.09, and I tweet out, hey, you need to be, you know, covering those SPOO shorts. And then we saw a quick 5-handle rally in the SPOOs. But more importantly was in the crude, we saw a repudiation of that level, and you can see how they quickly just jump back. And so any pullbacks into this bar, you generally go about 50%, which we exceeded about 50%, but you can see that the market was really holding its own, and then that really got us blowing and going to the upside. It opened up this move for much higher prices. I've got 30.43 on the 30-minute, but I had 34.81 on the 5-minute chart. And you can see here that we have moved into a sell signal here. We made this run back up here. We talked about it, 34, which coincided at the same time that the dollar CAD was making a move on its lows, and we've seen a nice rally back in the dollar CAD. As I said, if you look at it on a 2-hour chart, it certainly looks like this market will need to go and test 32.87 before it's all said and done, and in all likelihood we'll take out this low here, 32.75. And I was just looking at it from a technical perspective, but you can see this was a very nice engulfing pattern right here on the 30-minute, which then opens the door for much lower prices, and we did get that. You see what I'm saying? So even at the completion, the close of this engulfing pattern at 33.79, we've had a nice run lower, which you're able to go and take advantage of. And we'll take a look at it on the 5-minute chart. So you open up the door and allow this market to go and move much slower. And obviously the 33.75 was a nice reactionary. As the market had dipped to 40, made that rally up here, and you're coming, you're coming right across this ridge. You see that right here? So that 33.75 was nice to go in at that point. You could go in and take your shorts, and you don't want it to get above 87. So your risk is reasonably low. I mean, it can spike up above it, but on the 5-minute close, we definitely don't want to see it to get back up above that. And we really didn't spend any time above this. This market immediately sold off. And then we just engaged back on the short side. And it was just a matter of levels that we're hitting. This 33.15 is pretty key. And we made a stand there. As we did this 33.0908, made a rally back up here to this 41. We didn't even quite make it there. The market still remains under pressure. If they want to bop them up a little bit, my guess is we'll make a challenge up here to 33.51. So we may take out these two highs, or this was not high, this is, it falls back, but take out this level, challenge 33.41, blow some stops, or just get past it to hit some stops, and in all likelihood run out of gas right before 33.51. Then that will open up the door, as we're talking about, for a challenge of 32.87, but eventually I think we'll make it down there to 32.75. I'm going to be traded pretty light today, probably take a few minor scalps, but not really looking to do anything. I'd rather come into the week fresh, see how the size of the market on Monday, take a few pot shots, and then I generally take the bulk of my action between Tuesday, Wednesday, and Thursday. And then, once again, unless the market's set up from a technical perspective, usually trade pretty light on Friday. To me, I think overall we'll make it down. To this 32.87 and take out this 32.75. But it's already been a pretty good week. We've seen this fantastic volatility, a sell-off, a rally back up, nice sell-off, another rally, a dip, and here's the where the market didn't want to pull back very much at all. We start launching up. Right now, the way I look at it is just like I'm trying to pick up nickels and dimes in front of the bulldozer. I just don't see the point of it at this juncture after a pretty good week. My guess is, not my guess, but my thinking is take your marbles and just go home. Unless you want to go in and poke in there and see if you can get, like I said, if you're up in the European session, you're able to go in and catch some of this action on a very nice technical setup. Like I said, this engulfing bar right here gave you the opportunity to just go and play it from the short side and take pot shots up against the levels. But I think we're a little bit overdone here. I think we'll probably make a move towards the 33.50, and then from there, if we can get past the, as I mentioned, the 33.40, and then I would think that we'll see some shorts being taking place up here. But like I said, to me, I don't really see where there's really a whole lot of worth there. I guess we should move into the euro. Blake should be coming on in a moment.